Can you make money with Forex options? By www.options-trading-education.com. After several years of steady increases, the US dollar had a really bad day. If you did not see this coming, how could you have made any money? The question for the currency traders is, can you make money with Forex options? Bloomberg Business reports that the dollar suffers its worst day in 7 years. The dollar plunged by the most since the Federal Reserve announced the start of its Treasury bond buying program 7 years ago, as signs of a slowing U.S. economy helped derail bets on diverging policies between global central banks. The U.S. currency sank more than 1.7% against 6 of its biggest peers amid concern that growth in the world's largest economy is cooling. Currency traders are catching up to the bond market, where 10-year yields sank to the lowest in a year Wednesday, and futures are sending the strongest signal yet that traders expect the Fed to stand pat this year. Concern about a global demand slump and policymakers' response to a slowing growth worldwide has put the $5.3 trillion a day market in disarray. The dollar's pullback this week has reversed all the yen's decline against the greenback on Friday, when Bank of Japan introduced negative interest rates to revive inflation, which is stuck near zero. Could you have seen this and sold dollars for euros, yen, Swiss francs, or anything just yesterday? The problem, even in very efficient markets, is that changes can happen fast. Even when a change is predictable, the timing may not be clear. That is where Forex options come in. Rather than tying your money up in one currency or another while waiting for the market to move, a trade can have more leverage and less risk by purchasing calls or puts on one currency with another. Because traders only invest a premium when they buy an options contract, they limit their risk to the amount of the premium. Because in Forex options trading, a trader can exit his position by executing the opposite contract, he need never purchase the currency in question. His return on invested capital can be substantially higher than for someone who buys and sells currency directly. In addition, a trader who holds a currency such as the US dollar can sell calls on the dollar with any other currency. How will he do this if he believes that the dollar will not rise in price? If he is correct, he will collect the premium paid for the options contract and retain his investment capital. If he reads the market incorrectly, he will need to sell his dollars for another currency, as the buyer of the options contract will execute the contract and buy his dollars with yen, euros, British pounds, or whatever currency was paired with the dollar in the options contract. He will still gain his premium, but might miss out on a rally in the dollar. Yes, you can make money with Forex options and even gain a higher return on trading capital than by buying and selling directly. And the US dollar is not the only currency that may change rapidly in value in the near future. The Chinese yuan is under pressure as well. Widening yuan gap. The gap between onshore and offshore rates for the Chinese yuan is widening as offshore traders believe further devaluation is in the works. Here are some thoughts on the yuan gap. The gap between the Chinese yuan's exchange rates at home and abroad expanded to the biggest in 3 weeks, a sign that international traders are reviving bets against the currency after getting burned by the central bank earlier this year. No one knows for sure if the yuan will plunge or when that might happen. Thus, options are a reasonable approach when trading this currency. For more insights and useful information about options trading, visit www.options-trading-education.com.